Iqan advises clients on many securities and financial services regulation matters, and I can tell you from firsthand experience that Iqan's commitment to keeping his clients compliant with specific regulations relating to capital raising, brokerage, and investment services, and much, much more is a breath of fresh air in our industry. Good afternoon and welcome, Iqan. Very nice to have you on our show.
Thanks. Yeah, happy to be here.
Iqan, you've had a very interesting journey in the financial services industry. And as someone who counsels firms on regulatory matters, all the way from investment funds to something we were just talking about, the Reg BI file, I'm super curious, what led to your current journey? I know you've worked abroad as well. Tell me your story.
Yeah, so I think I'm actually probably closer, and well, I am closer to the beginning of it than I am to the end of my career. But I am from the UK. I studied in Edinburgh. I actually studied politics, but I was always interested in law. My brother went to law school, and stuff that we talked about was always interesting. But I was also interested in financial services, and eventually, for various reasons, I ended up in the US. The main reason actually being that my wife is from the United States. So I moved out over here, went to law school, and then joined the firm that I'm at now, Michael Best and Friedrich. And I started out doing venture capital and private equity work, but it wasn't the kind of work that I wanted to do long term. And then my mentor, who's a broker-dealer and securities attorney, she really introduced me into the more traditional securities practice group. And I've just been working there since. So I do, capital raising for private companies. We do public company work. I help with the investment advisor and broker-dealer compliance practice. And a few other things. I do some work with blockchain companies as well, but it's pretty varied. But the nice thing about it is that you get access to different parts of the financial services market and industry.
Hey, there's always more regulations and more learnings, and I think for folks like you, Iqan, who are sort of in that trusted counselor role, there's always going to be fascinating opportunities to continue to learn. And speaking of which, in the past 2 years alone, there has been this material wave of emerging regulations, whether you look at what the Department of Labor is doing on the DOL PTE side, and speaking of sort of the wealth advisory world, there's Reg BI, and the list goes on, the marketing rule. As someone who counsels firms on how to sort of comply with the regulations, do you have any tips or tricks on how the industry can just keep up?
Yeah, it's funny that you mentioned a wave, because we were at the NSCP conference, and I think somebody mentioned a tsunami, which may be even more accurate. And it's probably partly, I mean, this is somewhat theoretical, but we're in a pretty partisan environment, and there's a lot of legislation by regulation, and there's a desire, when there's a change of leadership, to really implement the kind of ideology, not just kind of a political ideology, but an ideology about how our financial services industry and how our markets should operate. And that can result in a lot of regulation, especially right now. And I think that, one thing is that there's no shortcut to understanding these rules and how they impact our clients. And that means reading the proposals properly, and even though they're 500 pages or whatever, and reading for example what the SEC is really trying to solve when it's coming out with these rules, and then how it changes it in the adopting release later on. And there's no shortcut for that. For example, I was helping a client recently who wanted some advice on how the solicitor rule, or the marketing rule that was combined and amended recently, how that would affect their payment to DJs of radio shows who were compensated to advertise their investment advisory services. And you don't get that from the black letter of the law and from the rule language, but you do actually get some interesting guidance. It's not perfect because it just won't be from the adopting release, but you do get it from the guidance that was provided by the SEC in the however many hundreds of pages where it's buried in. And so that's one thing, is just becoming familiar with the rules and trying to understand how the regulators are actually viewing it. And then seeing also what they're doing in the enforcement setting, because, there are kind of interpretations or the way that the industry views rules that a regulator may come in and dispute, or, we may think that the SEC views a particular regulation one way, and then it seems like there's a shift. There's a change somewhere, and now they're changing the way that they are implementing or enforcing those rules. And so being aware of what's happening in the world of various clients and being able to use that experience in other settings is really important. And a key example here that's coming up recently is, FINRA has this series of red flags, and that it has posted in a regulatory notice. I think it's regulatory notice to members 1918, and it sets out various red flags. But the red flags are red flags of some kind of violation, right? So they're red flags of money laundering, or they're red flags of a person who may be trying to sell unregistered securities that do not fall under an exemption. And they're not automatically just, evidence of money laundering, but the SEC is taking a really hardline approach that we're seeing with our clients, where they're going through and doing this sweep, looking for situations in which a firm has spotted something that could be a sign of something unlawful. They've checked it out and they think that there's no issue. But the SEC has just taken the view that, well, you're just going to have to file a suspicious action report. Even if you did the due diligence, even if you investigated the issue and you decided that there was nothing there, you still have to file a suspicious action report with FinCEN. And so that's just something that people didn't understand before, didn't interpret the anti-money laundering rules that way. So yeah, it's being aware of the rules, but it's also being aware of how regulators are actually interpreting them.
You know what? I love the example you're giving, and in our line of work, we, speaking of FINRA's sort of continued guidance, their annual examination report just came out, and in that, within the sales and communication branch of guidance that they've touched on, they've gone back and again reiterated, look, on making product recommendations, you've got to compare reasonably available alternatives. And to your point around interpretation, there has been so many, we speak with the industry, we speak with folks, broker dealers across the industry, but time and time again that we see this thing where advisors are self-attesting that they've assessed reasonably available alternatives. Well, can you prove it? Can you show, 2 years down the line that you've actually considered available alternatives and costs when making that recommendation? Same thing with account type or rollover recommendations. There's somewhat of a gap in general understanding or being able to illustrate it. And so this sort of, taking your money laundering example and the one I'm talking about, I'm wondering, what role do you think Iqan technology plays foundationally in embracing or even strategically embracing those regulations to improve the longevity of that broker-dealer's business or that wealth management practice?
Yeah, you are kind of the expert in this area more than I am, but there's definitely a huge role there. And it's not, it's in wealth management, but it's in all of the other areas that relate to that as well. For example, even when a company is raising funds in a private placement, and there's general solicitation involved, and you need to check somebody's accredited investor status, there are some ways that you can engage a service provider to do that. You can have a broker or an attorney, review their tax records, for example. But you can also, outsource that to third parties. And technology has always been at the forefront of making it more, providing a more efficient process for people to input information and then a response to come from that. And I think that where a rule is based on, is applied in kind of a calculation way, for example, with an accredited investor status, as a percentage of the amount invested being a percentage of total assets, for example, that's something that software can solve pretty quickly, if it was available. But also in for example, the again, anti-money laundering space, and even customer due diligence, when a broker is onboarding a customer and wants to see what their background is in order to make sure that there are no issues involved, that the person isn't a bad actor or isn't somebody who is a politically exposed person, or somebody who is has some kind of criminal history that would give the broker a reason to deny the account. That stuff is pretty much, it's impossible for a broker, I think, to be able to do that effectively without outsourcing that to a third party who can use software to get a ton of information that is accessible through public files and then condense it into one conclusion. So there are key areas that I think that brokers are already relying on, but there are also spaces where it can also help improve the industry. And one of the interesting areas of development is in the securities clearing and settlement cycle. So Chair Gensler of the SEC has spoken about the potential of blockchain technology to move us to a single day transaction cycle. And I think that technology does allow for that to happen, which means that somebody can, parties can exchange funds and securities, almost immediately, instead of, up to 2-3 days. And that has really big implications for clearing firms as well. I mean, clearing firms who are members of the National Securities Clearing Corporation are exposed to huge net capital requirements, enhanced net capital requirements, and intraday margin calls that are assessed by the clearinghouse and SEC. And that can have a really bad effect sometimes in the way that it's calculated. Like, I mean, I don't have inside information about the kind of whole Robinhood and GameStop saga, but it seems like, potentially Robinhood was assessed a margin call that was super high, and I had to get, investment in the space of whatever it was, 24 hours, in order to continue functioning. And the whole purpose of those rules is to protect the financial markets and customers, but you have to question whether or not that's actually achieved if a clearing firm is almost put out of business, even though the value at risk that it represents to financial markets doesn't seem to be as great as what is calculated. And I think that blockchain technology provides a solution to that, because you don't have to worry about whether or not there's going to be like some sort of external breakdown in the financial markets or a cybersecurity attack at a clearing firm that will prevent the transaction from happening.
Absolutely. This topic of blockchain obviously kind of sometimes gets muddled in with kind of what's going on with cryptocurrency, but I totally agree around the kind of net positives of having some blockchain technology, specifically in the use cases that you talked around, like clearing and settlements. And the only other thing, though, that I whoever's listening to this, I've advised them to kind of take a quick Google search and take a look at what happened with the Australian Stock Exchange. they went down the path of trying to set up a system where blockchain actually is instilled within the trading systems. And it was fairly recent where they had to write off millions of dollars of undertaking within that. So I totally agree. I think there's times where embracing newer technology can really have a foundational impact on the entire infrastructure of the business. And then there's times like the Australian Stock Exchange where it could kind of go the other way around. Let me ask you this. This is one of my favorite questions, and part of kind of maybe wishful thinking. But if Iqan had this magic wand, if you could change our industry for the better and transform it for the better, what would you do? What would you do with that wand?
I mean, the first thing that I think of is it's not the most exciting thing, but I honestly think I would have some kind of process that requires regulators to work at or have some exposure to what it is like to be a company, a firm that is in this regulated space, so that they can understand the business situations in which the firms face every day. I think that a lot of regulators, for example, FINRA, have gone there from college and have learned the industry from a regulator's perspective, and that's not necessarily a bad thing. And it doesn't necessarily mean that they don't have the kind of analytical or knowledge tools to be able to regulate properly. But it just means that when you have your experience of the world impacts how you see it and how you analyze things. And so if you're every day tasked with enforcement and looking for problems that exist within firms, then it's really hard to understand the actions that a firm takes in constrained parameters. It's hard to view those in any way other than how is this a violation of securities laws? And that's not always, I think, helpful for the financial markets. And so I think that I would have some kind of framework for having regulators understand the nature of the business that that are regulating from an inside perspective.
Hey, that's sound advice and sound counsel, Iqan. I totally agree. And if there was a way, and I think regulators are trying to do that more and more with having stakeholder groups and understanding business better, and obviously participating in industry events where we met at the NSCP. So I really appreciate your time, and I appreciate your insights. Always happy to have you back on our program, and
thanks so much.
Appreciate your time. I hope you enjoyed the session, and please subscribe to InvestorCOM's YouTube channel and our other social channels to hear much more insightful conversations and episodes.